Hey everyone, Tony Ivanov here with another day trading video lesson, and today I'm going to talk about exactly how I lost $157.74 today. Now this may seem like a big loss, but yesterday I made 658 bucks, so this was well within my risk level. Took one trade, ended up being wrong in it, no big deal. The thing with trading is that you can never ever be right 100% of the time, and if you think that you will be right 100% of the time, then you will likely face lots of emotions. So that's a topic that I'm going to break down today, so make sure you stick around through the end of this video. But first, I just want to remind everyone that we do have a free Facebook group, the Trade Buddy community. You can join this completely for free. Link is down below. All I ask is that you answer 2 questions, just so I can be sure that you are not a bot or a spammer. So check that out, and hope you guys enjoy this market recap. Alright everyone, so we're going to go into today's trades. I only took one trade on HEAR, bought 350 shares at 10:58 a.m. Average price was $12.85, and I sold for a loss at $12.60 only 40 seconds later. So very quick trade, was in it a bit too early. My plan for today going in was to really only focus on midday. We have been seeing this type of price action in the past few weeks where the biggest spikers, sorry, I'm trying to get rid of this red thing. The biggest spikers have been towards the midday. The morning action has been very choppy, and over and over and over again, we have seen this 1 minute candle right at market open do a breakout over pre-market highs, but then get stuffed. This has happened so many times. Just go look back at my videos and you'll see it. So my plan today was to really avoid the morning action and try to save my capital for a midday move. Now just some background, right now I am on a cash account, so I am limited to how much I can trade. Today I had around $10,000 to trade with, and I really wanted to save that whole 10 grand for one play. So HEAR opened up. This was a massive pre-market gapper on earnings news. They had great news because of their headset sales skyrocketed on Fortnite hype, so jumped up like massive in pre-market, and then you can see this obvious after hours resistance last night at 1098-ish, 1090, was broken this morning during pre-market and basically held that all morning. It did crack it just a bit, but overall did hold it, and at market open you can see we had a very clean morning dip down to that level. Now this is the same exact type of setup that we had yesterday on DCIX, and this trade I nailed yesterday. I made 658 bucks, and it was kind of the same exact thing here. Same exact setup. See, pre-market we have an obvious resistance line. Previous resistance becomes support. You can see at market open this failed, dipped down to that support level, bounced off of it, and then ripped up 50, 60, 70 cents per share. I should have really taken this trade, and I was thinking about it, but because of my overall plan to wait until midday, it caused me to miss this trade. I didn't want to, quote unquote, waste my trade on a morning play when my plan was for the afternoon, and this was kind of, you know, not the right thing to do. I really should have taken this trade once I saw my edge come into play, because right now this is my pattern. I am loving these dips to previous high of day support levels. This is my cream of crop play right now. So when I saw it happen this morning, I should have just taken the risk and jumped into it using proper risk reward ratios. But you know, I froze up. I didn't do it. I wanted to wait for that midday move, and then it ran up from 1098 all the way up to a high of 1390. So it could have made around $3 per share if I timed it perfectly. Not saying that I would have, but I could have timed it really well if I just bought into this dip and then rode it on up using the 20 EMA as my stop. So once I get up, say above 1175, I would take partial profits and let the rest ride up all the way until we break the trend, being able to secure a massive piece of the move. So I missed out on that play and made me kind of disheartened. We were looking like we were gonna make a gigantic wedge, but this ultimately failed. We kept making lower highs, so every lower high was being shorted into because this stock had short sale restriction on, meaning that the shorts were only able to short into upticks, up spikes. So every spike up, it got shorted heavier and heavier. Eventually, the buyers couldn't take it anymore, and they gave up, and it crashed all the way back down, and now it's sitting at 1120. So the point that I bought, I was trying to do a dip buy here off of VWAP. Really not the best planned trade. I was kind of feeling those, the emotions of like revenge trading and trying to get back at HER for me missing the morning action, that I kind of did force this trade. I will admit it. It wasn't the best setup. Looking at this wedge, we did break the support, so it was inherently bearish at this point, but I did try to take a dip buy using VWAP as my ultimate stop. And so this was the candle that I got into, 1058 right here. I got into this candle, I got in at 1285. So one, I got in way too early because we didn't even test that VWAP level. And two, like I said, this was a forced trade. It wasn't my ideal pattern. It wasn't a dip down to a previous high of day support, and it was just kind of a forced trade trying to buy any dip that was there. What I should have done was taken this trade, this obvious trade on that dip down towards the previous high of day. So missed out on that trade, but no big deal. Took one loss, lost $157. I'm not too upset with it. I saved most of my capital, and I'm gonna trade that tomorrow. So one thing that I did do, which was a smart thing to do, was because we missed the overall best play of the day, so to say, once we got into midday, I reduced my size a bunch on this trade. So I didn't use my entire 10 grand. I only bought 350 shares. So I saved most of my capital for tomorrow. So we're going to do the same thing tomorrow. Look to see what stocks are going to be gapping up, and I'm going to be looking for those dip buys down towards previous high of day supports. One thing I do want to note though about the overall market action is that it is looking like the momentum in the penny stock market is dying down quite a bit. We're not seeing the overall exuberance and these massive spikes that we've been seeing. Each stock has been starting to fail. So be cautious tomorrow because one, it is Friday, and two, we are seeing kind of a lull in the markets, a slowdown period. So just be cautious. Don't be too aggressive, but if you do see your pattern, if you do see your edge, take the risk. One thing I always like to say about trading is that if you try to look for a confirmation of your pattern working, then probably by that time it's too late to get in. There's going to be too much risk. It'll be too far off of its support level, and if you try to buy at that point, you will be chasing and you will really allow emotions to come into the trade. So once you really just have a plan in place and you have an edge, a strategy that is profitable over time, you need to buy when you see the signs. So in this instance on HEAR, once I saw it retesting this 1098 level, I should have been buying using a risk at like 1080 break. So risking 10-15 cents per share, knowing that this stock can go at least $1 per share up to pre-market highs. So that's very good risk reward. That's how you should plan all your trades. People are probably typing right now down in the comments, whoa, Tony, you're going to use 20 cents per share risk? That's ridiculous. You should use 5 cents per share. But, it's really impossible to have that type of a risk on a $10, $11 per share stock. You would only have like a 5-cent risk if you're chasing a play and you're just buying randomly into a spike. This is more controlled, so you can allow a bigger risk because there is a higher probability of it working out and bouncing on up. So those are my thoughts for today, guys. Not too much to talk about. HER was the main runner. We had VTVT also spike up too. Overall though, the morning action was very strong. AWX, this was one of the main things for me to believe that the crazy price action that we've seen for the past week is overall dead. You can see this spike on AWX opened up 250, quickly spiked up to 350, got halted, and then crashed all the way back down. So that's a very big shift from what we saw last week, where we would have stocks spike up, they would halt, gap up higher, halt, and gap up higher. There's a clear change in momentum to where now the morning spikes that we're having, they're not getting that second leg on up. So be careful about getting into these early morning spikers. A lot of them have been getting stuffed, so just be cautious and adapt properly. Alright guys, so that's today's video lesson. Hope you guys enjoyed, and I hope you learned something new today. If you did, please leave a comment down below if you have any questions, concerns, or comments you just want to give us. If you guys want more information about day trading, I do offer a lifetime mentorship program. First link down below. You can also get my free ebook, How to Day Trade, and also you can join the Trade Buddy community where you can just be surrounded by a group of new and experienced traders who are all giving out their alerts and supporting each other in becoming better traders. So there's a 7-day free trial for that. With that platform, if you get the platinum subscription, you can watch me trade live every single morning. So you can hear me talk, watch my screens, and really just get into my head and see how I trade these markets profitably. So if you guys want to check that out, links are down below. If you have any questions, send me an email, tony@tonyivanov.com, and I'll see you guys in tomorrow's video.